Hey guys, this is Stephen Buis, also FOMO NOMO on Telegram. Reach out if you need to. We have a great community here, and we have very simple strategies that present profit every day. It's also the leader of the happyprofits.com, where it's the right place to learn how to place the right trade. So we're going to talk about Law 8 of the 25 laws of trading for the 25 days of Christmas. So Law 8 is very simple. It says lose less than you make. So hopefully I'm giving you insights from a real trader that's been through the situations, so you understand that someone's reaching out and giving you a little more insight instead of just the frosting on top of the cake. So basically a common misconception is that you have to have more winning trades than losing trades for long-term success. No, you don't. I've seen a guy with 12 winning trades and 48 losing trades, but his average win was 1,000 and his average loss was 2,000. So you calculate all that, you go, 12,000 up and 48, 9 times 2, and he still made $2,400 a month. So that's not bad. It's not the ratio I'm looking for, but it is definitely still a ratio of 20% wins as long as you lose less than you make. That's the key. So basically what I'm always looking for is I'm looking for 2-to-1 or 3-to-1. That's the ratios I look for. Even if I'm scalping, I'm looking for 2 targets on a small maneuver that I'm sitting there going, I like 2-to-1, because if I'm not risking 2-to-1, then if I break 50%, and I'm around 88 to 95 right now, and I could hold longer and do it like that, but I'm good with the trades I take. I'm very happy. I make my daily money calmly now. I used to be frantic. I can call out a trade usually 5 minutes before I take it. That's a very nice thing that it's going to happen. It still has to prove itself. That's one of the biggest keys that you're going to learn but your risk to reward ratio. If it's just 1-to-1, then yes, you better make more on the one. But if you're doing, I make 100 or lose 100, well, you're 50%, you're just breaking even. And now if your ratio is less, that you're winning compared to you're losing, then you are going to slowly bleed out your account. So you really want to start going 2-to-1s. That doesn't mean hold a losing or a winning trade long enough that it turns into a break even or loser. It's just saying, hey, if the stock or something like that, or maybe you're trading in pre-market and you see these little tries all the time, you got to notice those little nuances and proper sizing and all that stuff. But you definitely want a ratio of at least 2-to-1 if possible. Some people trade 1.5-to-1, nothing wrong with that. But if it's 1-to-1, you definitely have to have over a 50% trading ratio, and then that's going to help you size up and all that. But you should. The other thing is when you're looking at losses, and also you got to reject 2 things. I'm going to go over a couple other things real quick. I'm going to look at those. That you reject averaging down. Averaging down is basically I'm going to keep buying lower, waiting for and hoping that it's going to go back up, and it might. And that one day you might just call yourself the best trader. And but after a while, then that means you're just managing whatever you get into. So you probably thrown out your trade plan and you're just averaging down, which means I'm trying to buy lower, so if it does go back up, maybe I can break even. And I've done that. I've done a 45-minute trade. I think I bought 17,000 shares to make 0. And not lie, I was very happy to get out at 0, but that just means that was a chase. I chased it here, and then I started chasing it here, when clearly the trend is just, I'm at the top of the trend before it goes down, and I know that, and I should have just cut maybe $50, and then eventually I have $30,000 in a damn trade when I could have just taken a $50 loss and moved on. Went and locked another stock, because if I'm watching this stock go down, there's probably another stock going up. So reject averaging down. The next thing is turn in those losses into lessons. Well, the biggest thing you can do is if you are losing, you got to say, what am I doing wrong? What does Steven know that I don't know? He knows how to buy in low, sell high, and yes, he doesn't get the whole ride sometimes, but sometimes he gets all the rides. There's a stock just doing the zigzag all the way up, and I got 3 of the rides, and you could add up, and they're a lot longer than the ride itself, and I played them pretty dang perfectly. And I remember some lady calling me and saying, Steven, I'm losing money. And I said, well, why'd you get in the trade unless you had an out? And it was going down, and it was basically an ascending wedge that was forming like this, where they finally disagreed at the open, and it only went $1 and then slammed down. But the trick for her was it had to go all the way down, back up. She didn't take the break even. Then now she calls me when it's going down and said, look, if it keeps riding this trend, you're lucky, but you better cut it here. This is your stop loss. If you don't hold it, it's on you. I have told you what to do. That's what I would do. Usually I have people that call me 3 times a day, not going to lie. They usually call. One time it was on a vacation. I was on an island sipping some cocktails, and some guy got in a trade after hours. Right at the crust of after hours, there's a lot of volatility there. Same just like the open. Almost every little trading section, when there's a crossover section, there's some highs and lows that can get you excited. And he got in a trade, and then it started going down. And I said, get out of the trade. And then he goes, I said, get out of the trade or don't call back. And I hung up on him. And so he got off the phone call, and he did get out. And then he calls back 5 minutes like, oh shit, I had 1,000 shares at 25, and now it's at 19. I said, well, that's $6,000. How much did I save you? Send me the money. Just kidding. But anyway, so he basically now called back, and he goes, what if it goes up? I said, why don't you go take a walk? Anyway, so the stock did start going up. I actually traded it after it went down because it stabilized. It showed less and less selling, and then it started that. And I took a little $2 trade on an island and made about $1,500. And he was sitting there. He goes, did you take that trade? I was like, yes. I wouldn't have even looked at it unless it's you. And he goes, well, why didn't it work at the top? And I go, because you bought at the top. You're buying a shift of two confluences, pre-market to open market to after hours. You got to watch those hours. There's some stuff that'll pop up, get you excited, and you didn't even realize that the buying candles got less right when you bought, and you bought the top. So you got to start looking at little things like simple little shapes. The candles tell you everything. The chart tells you everything, and it's just sometimes you can get excited. But usually you're getting excited too late instead of that. Now, that same stock that went up, now I'm looking for the retrend. So I do have it under my watch, but I'm not the first to the party. I used to be the first party, and sometimes I'll jump in those candles. And if I jump in the middle of a trade, I take a lot less shares, and that's actually where I end up buying it a lot later. But I do take profit, but you can't be going gambling, because otherwise you're gambling. You don't know if the stock's going to do that. But if a stock can go up and restabilize, take the trade there and ride it back up for another play. So, but again, reject averaging down, turn your losses into lessons. So chart, somebody's chart. I mean, if you don't have, you got to have something on your chart. I have certain indicators I use on mine. They're momentum indicators, because I want to trade momentum, and if the stock's not going up, then why am I even trading it long? And I have a criteria for mine. And but averaging down, silly, turning losses, if you're not learning from them, you're going to continue to make them. That's the key of turning losses into lessons. So just chart up, and you're going to realize that I usually just say one thing. If you're losing, you're chasing. And you're probably buying the top, and then you got to figure out what is the top. And there's a couple things that'll tell you it's kind of the top, so you need to be watching on there. Also, I'm going to give you a little excerpt from the 2006 and 2008. There's a French trader, and basically what he did, he slowly kept averaging down for the French government, or one of the banks of the French government. And he kept averaging down, and averaging. This is 2 years, I just told you. He averaged down for 2 years. And when they finally caught him, it was 4.9 billion. Now, I know you don't have billions, and you're never going to have billions with that kind of mentality of buying down. But see, that's chasing a lost trade, revenge trading. When all you had to do was cut it and let the trade represent itself. There's almost about 9 to 10 trades on a chart every day. The same chart. Just watch the chart, whether it's going to be long or short. There's 9 or 10 trades easily. I watched a whole other person's whole trading strategy, and he goes, this strategy is a 20-minute strategy. He eventually gets it down to 3 20-minute windows every day. And it's pretty good. I've already checked out 20 charts. I'm going to have to check out 100. That's like a little rule of mine, is I want to back test it. But I went ahead and bought part of the system for a trial service just to look at it. And I'm curious about it, because if it's very predictable, he's caught it, then it's predictable. And that's all you're trying to do, is get predictable wins and stop doing averaging down and other things. So by yesterday's law, better setups, lose less than you make. So try to have a decent ratio of wins, and start cutting your losses, and you'll start saying, oh, I have defined maneuvers. So one time, I think I saw my last one, sorry, I keep rambling on. I remember my uncle cutting a piece of plywood, and he did this, can you hold this? And he did something weird like that, and you know, it's the opposite of that, but he did this, and I was like, oh my God, did you lose a finger? Like, no, but if you don't listen, you can lose yours, and you can walk around like this, because maybe you'll lose two. Anyway, he basically said, look, he set up everything. I'm like, God, this thing forever. And now I'm that old man, setting it up slowly, watching the right setup, doing that, trying to lose less than you make. And after a while, he basically said, you're preparing so a smooth trip, a smooth trade. I never thought about it until right now. But yeah, so by you setting up all the components, maybe I'm going to work on a checklist, because that's what I think is better. If you don't know, follow a system of a checklist before you enter a trade. That's a good thing too. That's coming up soon. But for him, just planning that out so it went smoothly was very key to me. And you don't know what in your life someone told you or not told you, or maybe I told you or somebody else told you, and maybe it's obviously not a loved one or a spouse, or, you know, not saying she's not a loved one, but telling you stuff that you don't want to hear because you heard it so much. So just plan all your stuff. Make sure you have a trading plan. If you lose, say why you lost. So you go, I cannot do that. And then you start forming rules. And those rules, if you started hearing them, you don't run into red lights. Hey, y'all have a good one. Y'all have so much. That was the 8th law of trading. Lose less than you make.